Good morning, everyone. This is Kathy. First off, sound check. Please let me know if you can see my screen as well as the heat map that I am showing to you right now. Let me know that you can see it in the questions box or in the chat box in our live stream. Let me know if you can see everything well, so that we can get started. Just give me a second to get us underway. All right, thank you, Cheryl. Thank you, Frank. Thank you, Bernardo. Where is everyone coming to us from? Are you coming to us from Europe, the US? Let me know where you're dialing in from. We have a lot to talk about today. Thank you so much, Gamer. I'm glad to see that the sound is coming on well. I'm just moving some screens around. Just give me a second. Okay, yes, good. I'm glad everything is working out properly. All right, so we, as I said, have a lot to talk about this morning. From Thailand, Yoni, that's great. One of my favorite countries in the world, in Spain. Actually, I love all of them. As long as you have good food, which all of you, Spain, Brazil, Helsinki, do. I am delighted to have all of you on board with me. Okay. So, as I said, there's a lot to talk about today. We have geopolitical risks, we have a heavy calendar, we have seasonality, we have just so much going on. And so I think, first off, the first thing that we're going to talk about is, of course, the greater geopolitical picture and, what's happening and why the market in many ways kind of shrugged off the what could have been really, really bad situation for the financial market. So first, taking a look at the preview of the markets. Once again, hello everyone. Welcome to Kathy's Caffeinated Market Buzz. I've got my coffee. Hopefully you have yours too, or whatever is your drink of choice, and you'll join me for this market outlook talk. So as I said, we could have opened far uglier in the markets. And in some ways, we did open lower, but many of the markets have kind of snapped back, and it wasn't as deep of a sell-off that you expect with, the possibility of World War III happening, when we were watching the screens on Saturday. So taking a look at the markets, stock futures are up a lot. Dow futures are up 300 points, which is a really nice move. Oil is down 0.7%. Gold is up. The dollar is actually mixed. It is lower against the sterling, the euro. It's lower against certain currencies and higher against others. It's initially caught a safe haven bid when we did have the the markets open. But even without this morning's data, which we'll talk about in a second, we had seen at the start of the New York session, 7 a.m. New York time, even earlier, a lot of those, the losses in euro and sterling and Aussie and Kiwi were recovered. Now, we do see the dollar kind of clawing back. And the dollar is clawing back because fundamentals are mattering. And now we're not talking about fundamentals in terms of, we're not talking about fundamentals in terms of the geopolitical picture. We're talking about fundamentals in terms of data. And taking a look at the eco calendar, you will see with this morning, we had US retail sales report, hands down one of the most important pieces of US data this week. And guess what? Another upside surprise, another good US number. US retail sales were double expectations, 0.7 against 0.3 expected. Ex autos almost 3 times expected. So non-farm payrolls is good. Inflation numbers, consumer price index is good. Retail sales report is good. So rate cut expectations, which we look at every week, have certainly changed since last week. And we'll just wait for it to load for a second. And we're looking at June because no one cares about May. And right now, June, the market's pricing a 79% chance of no change in June. And then in July, they are pricing in a only a 44% chance of an interest rate cut, which is not a lot. I mean, 44% chance of an interest rate cut in July, that's like pretty modest in my opinion. And that compares to basically down here, 50, 60, 70, 70% chance a week ago. So a full interest rate cut in July is no longer priced in. And it's not priced in sort of until September. And that's how these economic reports matter. That's why the dollar is kind of rebounding this morning, because we have the third key piece of good news. Like I said, non-farm payrolls is good, inflation is good, retail sales is good. That's pretty much what the central bank looks at. And when you have all these three things, surprising upside, it's very hard to justify a June interest rate cut at all, period. That's off the table. And it kind of reinforces the case for why they are, that they've been resisting that and why they've been talking about a later interest rate cut. So, that is why the dollar, which this morning before the data came out was actually trading lower against the euro, sterling, pretty much lower against all of the major currencies except for the Japanese yen, is now rebounding because it's kind of back to fundamentals. It's back to good data. It's the reason why US 10-year yields are up almost 2%, why Dow futures are up 300 points. Now, of course, we cannot ignore what happened over the weekend, and that's what I want to start with talking about. We had Iran attack Israel with a barrage of missiles, and that's obviously something that the world was really worried about, because that was something that could most certainly lead to World War III. But what appeared, and as you can see, the market has stabilized since then, and the stress of geopolitical tensions have eased. And the reason for that is because it seems like it was a limited attack that was telegraphed in advance, they said, to their partners. And also, Iran came out fairly quickly and said, this is the conclusion of our actions. So all of that basically led everyone to believe that they weren't going to come back with more. Now, the ball is in Israel's court. The market is waiting for a response from Israel. They're hoping that there will be none or an extraordinarily measured one, which is why the markets have stabilized a bit, because Iran tried to make it clear that this was a response to the bombing in their consulate, and that they did not anticipate this being a multi-day thing, that this was the conclusion of what they were doing. So with a lot of these geopolitical risks, it is extraordinarily headline sensitive. And, if you traded as long as I have, you will know that, with a lot of these geopolitical tensions, the impact on the market is usually not, doesn't last very long. I mean, even if you haven't traded for very long and you minimally have been trading during the time that Israel got attacked by Hamas, or when Ukraine was attacked by Russia, the markets recovered from that, right? I mean, it's all terrible news, but the stock market went on to hit all-time highs. As Dow futures went on to hit all-time highs. This was back in October. It did drop a bit, but then it just kind of powered back. It shrugged it off. And in some ways, it's very early. It's trying to do the same today. It's really about the focus on headlines versus data. And the headlines seem to be less inflammatory as we start the new trading week, whereas the data seems to be very, very good, at least for the US. And that is why the markets are up. That is why US 10-year yields are up. That is why all of the major currencies did not crash. But it is important to watch because, Iran now accounts for 3.3% of the global oil supply. A lot of it is being sent to Russia, of course. And it's also important to watch, gold. The only market that really sustained in some ways its move is gold. Now, gold is up. It was up a lot more. As you can see my chart here, it was up to 24, above 24.25. It was up a lot more, but still up. And we've been talking about the gold rally. We've been talking about how the gold rally is the ultimate hedge against geopolitical tensions, the slowdown in the growth in China. So this is not a good candle, obviously, for gold. This is an inside candle after a reversal candle. Maybe it suggests it can pull lower. But even if it pulls back, as I said before, it's still on a buy and dip rather than a sell on rallies, because gold is still, for the time being, from a fundamental picture, very much in an uptrend. Also, I want to talk a little bit about seasonality. I posted this chart on my Twitter feed earlier. And today is tax filing day in the US, April 15th. Taxes are due. And, there's some, we previously talked about how April is the second best performing month for stocks, and how on a seasonal basis, stocks tend to do well in April. And that's why we thought, that it could still continue to do well. And actually, from tax day forward, according to this chart posted by Goldman Sachs from 1985, that on tax day, April 15th forward, we oftentimes on average will see a new leg in the stock market rally. Now, given that, we look at, this was on the S&P, so let's pull up the S&P. Given that the S&P is pulled back, and did the Goldman Sachs chart, yeah, look, it pulled back on a historical basis. Given that it pulled back, there's a possibility that we could potentially now move back upwards if seasonal patterns continue to hold. And as long as there's not a significantly aggressive response by Israel, and maybe this is the worst we've seen. I don't know. I'm not gonna attempt to guess at all. But if things stay as they are right this moment, we could see another leg higher in stocks on a seasonal basis, on a technical basis, and possibly even on a fundamental basis, because the tax day is oftentimes a precursor to a new leg higher that goes up to, let's say, it looks like the 19th. A new leg higher to the 19th, which is, so basically this week, it seems like it could be a good week for stocks. This week is also earnings week. We've got a lot of earnings that are coming out from the US, so that maybe earnings could be good, maybe it could lift it higher. And we certainly are riding the coattails of the really good US retail sales report. So, what does this mean for the dollar? This means that dollar yen rally could be sustained. Now, in terms of the dollar itself, dollar yen, obviously this is a new 34-year high for dollar yen, and above that, actually my charts don't even go that far, but the Japanese are getting nervous. There were headlines earlier today, overnight, where the Japanese Japan's key currency official said that they are in contact with foreign I forgot what they were, but with other countries in regards to the currency. So they are teasing coordinated intervention. Now, in the history of intervention, and perhaps this new Japanese government realizes this, the intervention rarely works unless it's coordinated with other central banks, the Federal Reserve, the ECB, Bank of England. So teasing coordinated intervention is pretty significant because it means that they're getting serious about it. I don't know if the other central banks really want to come in and really help them, but because if you think about it, especially the Fed, if they come in and sell dollars, a weaker dollar is inflationary, which they definitely don't want. So they really don't want to do that. But nonetheless, the Japanese are teasing intervention, coordinated intervention. But it's all talk until there's action. And that's what the market believes. Until they come through with action, they're just going to keep buying dollar yen because US state is good. 10-year yields continue to rise. Now, there is an opportunity. Of course, there's a constant opportunity for intervention. They could come out at any point in time. But there is an opportunity for intervention next week when we have the bank, not intervention, but an action next week when they have the Bank of Japan rate decision. Maybe they'll raise interest rates again. And maybe that will actually work because that would show their resolve in terms of trying to clamp the gains in the currency. So we'll see. There's a lot of moving parts. I'm bullish dollars this week. You see this in my heat map. I'm bullish dollars because data has been so good, and the retail sales number this morning was even better. And also, if anything, the dollar should catch a safe haven bid. So I'm still very bullish dollars. Now it's overstretched. We have to be careful. We had a fantastic trading week last week, almost 500 pips. We're going to be very selective and careful about the trades that we take at overstretched levels. Euro, I'm still bearish euros. A lot of the geopolitical tensions are geographically close to the Eurozone. And so that's obviously, a problem. We are seeing better data, and we're seeing data improvements. And we're seeing improvements in the industrial production number that came out this morning. And we're also seeing improvements in the PMIs, stabilization, but from a low base. This morning, we heard from an ECB official saying that the Iran-Israel situation could rule out a June interest rate cut. This is very important because this is true for everyone. And the reason is because the reason why the Iran-Israel conflict could delay any interest rate cuts is because the most direct impact it should have is on oil. Now, obviously, oil is down this morning, so we're not so worried. But if the situation gets inflamed again and oil prices skyrocket, that is inflationary. And high oil prices are already high. Higher oil prices is a huge problem for these central banks. So it will make a July interest rate cut from the Fed possibly turn into September interest rate cut. It will make a June interest rate cut from the ECB possibly turn into July interest rate cut. So what this ECB official said is very important for all of us to pay attention to. Nonetheless, I'm still bearish euros. There's going to be lowering interest rates before the Fed. It's obviously sold off a little bit. We want to be selling on rallies, not selling here. But they're definitely not in as strong as a position as the U.S. on a economic basis, and they're going to be lowering interest rates sooner. So that makes me euro bearish. I'm pound bearish, mostly because I'm dollar bullish and because I'm worried about geopolitical risk. This is a big week for the UK. We have inflation, employment, retail sales numbers. They could be stronger. My leading indicators on the calendar for our BK traders show that there could be upside surprises because there could also be stabilization in UK data. But I'd be careful because I'm still worried about this geopolitical risk. And also, as a rule of thumb, I don't love trading pounds, so it matters. So, it's another reason to stay out of it. Aussie, I'm bearish Aussie because we've got Australian jobs reports this week. And the last Australian jobs report was very strong. So I think that this week's number is going to show a slowdown in job growth. It's very hard to match the good number we have last week. Also, Chinese data hasn't been great. Tomorrow or tonight, We have Chinese GDP, industrial production, retail sales numbers. The February data was good, but the March data may not be so good. So overall, I'm bearish Aussies. I'm neutral Canadian dollars with the Canadian dollar. And if you are a BK trader, I encourage you to click on these cards because they give you more detail. I said CAD data was mixed. Jobs market number was weaker. IV PMI was stronger. Spending is lower. Oil prices are higher. But we have inflation data this week. And inflation data is expected to be softer. But oil prices could rally. So I'm neutral CAD. We'll see how it goes. I'm bearish Kiwi. Kiwi PMIs have been terrible. Last night's Kiwi PSI was terrible. It dropped from like 50 something to 40 something back into contractionary territory. And manufacturing numbers are there. We have seen nothing but weakness in Kiwi data. And that is why Kiwi is underperforming Aussie this morning. And I'm very bearish Kiwi. Swiss franc, I'm bullish for risk aversion flows. Less bullish than the yen. But the yen is just my personal stubborn view that I think the yen should rally. And even if it doesn't, it tells you not to be overly short yen, because at any point in time, the central bank could come in and intervene. And there's a lot more risk the other way, because when they come in, it's going to be like a 300-400 pip move. None of your stops are going to be able to handle that. And I guarantee you, there's going to be slippage, and you're going to pound your table of frustration that you were filled 100 pips lower than what your stop is, which you do not want. That's very, very bad. So there's a lot more risk to being long dollar yen and the yen pairs to being short dollar yen, in my opinion. Okay, eco calendar. So yesterday we had this terrible PSI, 53 to 47.5, very bad number, weakest we've seen in more than a year. So terrible number. I'm very bearish Kiwi because of that. And it explains fundamentals matter. Kiwi is the weakest performer, up only 0.07%. Earlier was down because, it is because of this whole scenario. So it's why Kiwi CAD is probably a really good trade too. Fundamentals matter. Today, this morning, we had stronger Eurozone industrial production numbers, weaker inflation data from Switzerland, and then this morning, the really hot U.S. retail sales number. And that is why dollar is holding on to its bid. Yes, Empire State was weaker, but these retail sales numbers matter a lot more, especially since next week we have GDP from the U.S., Q1 GDP, and this plays a very big role into Q1 GDP. And if you look at this, so we had 0.7 in March, 0.6 in February, minus 1.1%. So that's basically a wash of about so it's a mild increase. For the past 3 months, the Q4 was much weaker. So that means on a GDP basis, retail sales is going to be a positive contributor, not a negative contributor. Tonight, we have Chinese GDP numbers, industrial production. And as I said, these numbers could be weaker, although Q1 was a little better for China. We'll have to see. But that's going to be very important for Australia. And tomorrow, we have UK jobs numbers. And for the UK jobs numbers are expected to be actually there's no forecast here, but from my forecast, expected to be stronger because services reported an improvement in the PMIs. But we'll have to see. It's hard for me to believe that we're going to have. It's probably going to be stronger, but the forecast seems to be pretty high. The ZOO survey for Eurozone sentiment is expected to be a little firmer as well as we see data stabilization. CAD inflation data will probably be weaker. That's why I'm kind of bearish CAD. If oil prices do not rally off of this whole Iran attack, then dollar CAD could continue to rally if inflation data comes in softer. Then we have some housing data from the US, industrial production, not a huge market mover. We have inflation data from New Zealand, really, really important. And we did have a decline in food prices. If inflation data is weak on top of all the weakness from other Kiwi data, it's another really good reason to be short Kiwi. Japan's got trade data. And then as the week progresses, we have Powell speaking this week too. So definitely listen to that. I don't think he's going to say, his speeches are always important. So we've got to pay attention. UK inflation data, this is where I think the numbers could be better because both manufacturing and services reported stronger price growth. We have the Fed Beige Book report. Where is this? Beige Book report will probably report a little bit of vulnerability. We have Australian jobs numbers. Look at this, 116,000 jobs created in February. You can't beat that. There's no way they can beat this number. And that's why the number is probably going to be weaker. This number was unusually strong. And then we have on Thursday the Philly Fed number from the U.S., which will probably be weaker after the weaker Empire State. And then nothing else going on. Japan's inflation data, that's going to be very interesting ahead of next week's BOJ meeting. And then on Friday, we have UK retail sales data. So that can also be slightly stronger because we had a rebound in distributive trades. Taking a look at the charts, many of you asking me about euro yen. Let's jump right to that. So I'm bearish euros, and I warn you against being long any yen pair. But technically it looks good. Technically it looks to wants to go up to 165. I personally am avoiding all of the yen pairs unless I'm seeing a setup on the short side. That's just my personal bias. But on a technical basis, it does look very strong. Euro dollar. Euro dollar looks like it's rebounding a little bit. I like to sell it around 106, 107. This former breakdown point, if we get that opportunity, I like to sell it around that levels for an additional move lower. Sterling, if we get a move up to 125.50, 126, I like to be a seller of there as well, but it also tells you that we may be able to rebound back up to those levels if you want to look for a picking top or bottom opportunity, which is not my cup of tea. Dollar yen, parabolic move, 155, next psychological resistance. Traders are going to make a run for it until the Japanese come in and they say or do something more significant. Dollar Swiss is also in an uptrend. It's less risk to be long dollar Swiss than dollar yen. And in terms of dollar Swiss, the resistance in dollar Swiss, let me get rid of this, is going to be up at 90, around these highs here, 92.50 on the monthly chart. We have a little bit of resistance here, which is why it's struggling to extend it. We'll see, I don't see any glaring trading opportunities right now, unless, maybe tonight we'll get an opportunity to sell at a higher level. Aussie snapping back, it could snap up to 65.20. I am still a seller at higher levels. Kiwi, I'm super bearish Kiwi. Not selling quite here, but tonight when I trade because I don't trade, ahead of retail sales, tonight we're gonna be trading the Asia session. We're gonna be looking for short Kiwi opportunities. And then dollar CAD pulling back, oil prices are not up today. So I think that, any pullback is opportunity to buy right now at a lower level. Ideally though, 137 is really the level that I'm looking at. All right, questions. I know Boris will talk about gold in a minute. Let's see. How can oil prices affect the Japanese yen? Well, oil prices do not directly have a influence on the yen, although oil prices are affected by the dollar. Dollar yen is affected by the dollar. U.S. yields affects the dollar. So it is related, but it's not a direct correlation. How important are the previous daily highs and lows when trading on the hourly chart? They're important. Boris actually likes to use that quite a bit, and I'm sure he can share his thoughts on that a little bit. I personally don't. I just look at more longer term support and resistance versus previous highs and lows. Kiwi Swiss looks like a good short. I agree. And if we pulled up our, let's see, zip chart, give me a second. It's in the zip sell zone, which I love, with a red background below the indicator line. This is not the time of day that I trade. Remember, I always say it's important to know when to trade and when not to trade. But this will be, Kiwi Swiss will very much be on my radar tonight when I'm looking for positions. What strengthens the Japanese yen? Well, basically, it is a sell-off in U.S. yields, a sell-off in aggressive sell-off in stocks could do it. It could be some action by the Japanese, some rate checking with the banks by the Japanese. There's a lot of things that could lead to a yen rally, a surprise additional interest rate cut by the bank, interest rate hike by the Bank of Japan next week. Those are all things that could drive the yen higher. None of that has happened yet, but those are things that I'm watching that could do that. All right, great questions. And we do this every day for our BK traders. So, BK traders, I'll see you all tomorrow for our live stream. Now I'll hand over Boris, who'll talk about gold and indices.
Hey guys, how are you? Let me grab the screen first of all. Make me the presenter. Where is this? Wait, where's my screen? Hold on a second. What's going on here? Okay, show my screen. We're gonna go to screen 3. Okay, super. You should be able to see my screen. Before I start, I kind of want to read what I posted in our Telegram group today, and be sure to sign up for our free Telegram group. I'll put the link in just 1 second. It's free. It's absolutely free. Kathy posts a huge amount of information on there. I post a lot of huge amount of information here, but I kind of wanted to just read this quote to you because I think it's really important before we sort of start trading, which is that one of the biggest mistakes traders make is to assume that any financial instrument is just like any other. The fact is that every time you start trading a new ticker, you are a tourist. You have to deal with the conventions of that particular market. You have to know what they are. So gold is not the same as NQ, is not the same as oil. So like any other tourist, you should stand back, observe, tread lightly, and learn the culture so you can better understand the behavior. Just like human beings, markets are similar, but they are not the same. And I think like nothing sort of shows that better than gold versus NQ. Gold has been on a tear, and gold has been just sort of a monster positive market, right? But even within that market, you really have to know how to trade it. You can see I'm showing you all the trades I made this morning to show you how I traded gold, primarily with an upside bias, but also to understand that whatever bias you have in an instrument, you want to be using the technical analysis to time your entries. I think one of the things that people kind of really misunderstand is that they think that you can just apply technical analysis the same way to any market with the same approach, and that's absolutely wrong. For example, with gold, if you look at this, I'm going to just let me just pull back a little bit so you guys can see it. So if you can look at this, this is my proprietary bounce super scalper indicator, and it's showing you that when I woke up this morning around 4 o'clock, gold was in a steep sell-off, primarily for all the reasons that Kathy was talking about. There was a much more subdued reaction to the Iran-Israeli conflict. The market thinks that the Israeli response will be relatively muted. By the way, just sort of my 2 cents on that, if Israel hits any Iranian military targets, I think that's absolutely true. There won't be any kind of a material response. If, however, Israel chooses to, or by accident, hits Iranian oil infrastructure, then all bets are off. We're not even sure how and when Israel will respond. They may just simply decide they're going to respond with targeted assassinations of various Iranian general officials, because correctly so, I think they basically assumed that the whole October 7th attack was orchestrated by Iran, and therefore every Iranian military person is fair game for execution. So we'll see what happens in that conflict. Right now, the market is just sort of calm because they see that the defense of Israel worked, the defense of the allies worked, even the defense of the UAE and Saudi Arabians who came to the Israelis' defense worked. So for now, all of that has just kind of calmed the nerves. But if oil gets nicked, that's a big story. And I think that's an important story to watch for. But my point being is that oil and gold are kind of, I think, intertwined right now as big risk commodity currencies. And when you're trading this, so you see this big relief, risk relief rally, risk coming off. The fire is telling you this kind of a dumpster fire sales. And if you were just sort of trading momentum, you could have simply sold this. But when I came in at 4 o'clock, what you noticed was that there was a sort of a stoppage of selling at around the 60 and a nice big leg up. And if you were long-term bullish gold, then you were simply looking for tactical opportunities. That's the key thing. Fundamentals are strategic. Technicals are tactical. So you were looking for tactical entries within your strategic general view. So here I came in long here. I made this trade here. Even here, when I didn't get a chance, I sort of, I was away from the desk was walking my dog, so I couldn't take this trade over here where it recovered the moving average. So what I did is I said, okay, this is a very, very strong recovery leg. When it touches back to the moving average, I'll get long. I got long here, and that worked. Over here, I made a mistake, and this is a really good example of just sort of showing you some key ideas of I love showing you all my trades because you can see the great thing about trading views, you can see all your footprints of the mistakes. So the mistake here, look how high I'm buying. The tactical entry is on the retaking of the moving average, which would have been 73.9, would have perfectly made me 1 or 2 points. I would have been perfectly good at scalping, but I was late. I was chasing. Emotional and psychological error I make all the time. So you chasing, you pay the price. I got stopped out, right? Now I sort of controlled myself. I got back into recovery of the moving average. Boom, got done. And then I sort of stayed calm over here, and I did take the buy over here. The buy over here did not work. That was just a legitimate sell trade. And there's so many trades here, it's a little bit hard to see. But then I took the second sell trade right over here at 72, and you can see 9 o'clock open. Your gold really reacts really, really well to the 9 o'clock open. Boom, literally one candle, I got done, right? Now, my super scalper indicator, which is a little bit more relaxed, it's more of a positional indicator, has us into a long trade right now. Now, will this trade work? We don't know. We'll have to see. Sorry, this is actually wrong settings. I have to go. This says NQ settings. This is GC settings. We'll see. Looks like this first cycle didn't work, and we're going to now be patient and see if this gives us a second cycle, and we can see if we can resolve this trade on a second cycle. The point being is there's 100 different ways to make money in this instrument as long as you are knowledgeable of how this instrument is trading at this moment. If you understand the dynamics of what's going on, right? Now, similarly, when you look at something like the Dow, which I didn't trade today, but is clearly giving me beginning of the day. So one of the things that you'll find is that the single most important thing to know is when to trade the asset. We had news. You never trade the asset before news, right? You only trade the asset after news. After news, 9 o'clock, we start to go into the green zone when trades start to become fertile for us. In this case, we're buying the Dow at 47. Stop is 07, target is 87. We came very, very close. I think we came to this is 78. It's basically 10 points away. Hopefully this will hit target, and that trade works very well. So this is a preview of the kind of scalping I do every single day in my room. But what's interesting, and what hopefully all of you guys on YouTube are going to love, and be sure, by the way, to tell every one of your friends, we are going to take this public 2 days a week. Starting this week, I'm going to previews Tuesday and Wednesday, tomorrow and Wednesday, 9:15, YouTube live, hour and a half, hour 45 minutes, as long as it takes. I'm gonna show you my setups. We're gonna trade them live, just like you see over here, and we're gonna trade everything. We're gonna trade Nasdaq. We're gonna trade gold. Tomorrow we'll probably primarily trade gold, but we'll also trade Nasdaq. We may even trade the S&P. May even trade the Dow. We're going to see where the opportunities are. We're going to use my scalper signals, and we're going to use just sort of my own price action signals as well, so you can understand exactly how the trades come up. All of them are going to come up as alerts, and we're going to choose and select the things that I like best, and hopefully you guys will have a really, really good time. The one thing I can assure you, there'll be lots of price action. When you're trading with me, there's always going to be lots of activity, just like you see over here. So hopefully you guys will enjoy it. I got to go run because we're going to start my live session in my room today. But be sure to join me tomorrow, 9:15 at this channel, and we're going to be trading this live for everybody. Okay. Thanks, guys. Everybody have a great day. I'll see you guys. Tomorrow live for free. Take care. Bye bye.